What's going on, guys? Kieran from Gen Z Finance here. So guys, is Upwork a buy? Let's talk about this right now. The stock was brought to my attention from Financial Education's video, and he supported information that looked very promising, guys. Many of you are probably wondering what exactly Upwork is. Upwork is a marketplace for freelancers in fields like writing, graphic design, and web development. This site helps professionals find projects, communicate with clients, and get paid. So if you're a new freelancer or working in a new field, you can rack up valuable experience without always having to pitch clients cold hard evidence. But the site is full of new workers who are willing to take work for a lower rate, which can impact your earnings potential. Now, why is this so big? It's because big tech companies like Facebook, Twitter, Google, and Microsoft will let employees work from home through 2020 or longer. Now, companies are now looking at doing this permanently. I've seen many articles like this one where all the companies are actually considering getting rid of their actual offices and letting employees work from home. Also, many companies like Facebook, Google, Microsoft, etc. are all building towards removing our actual headquarters or office so employees can work from home. So where do you guys think these companies will be hiring from? It's Upwork, guys. I'm using an example here for mobile app development, skilled freelancers, and a whole list of people pop up, and I have reviews from many people, and any employer can see all the customer reviews to see if this will suit their company's requirements. COVID-19 has put Upwork in the best position possible right now, with many people out of jobs and are turning to apps like Upwork, and this has put them in a great position to generate greater revenues and come out net positive. Upwork had released earnings August 4th, where they documented a revenue growth of 92% year over year to $87.5 million, exceeding their company's guidance numbers. The company is expecting to grow revenues in the range of 89 to 91 million in the third quarter, which seems a little too conservative, but in the conference call, they state that their guidance numbers are a little conservative because of the economic uncertainty in these times. Taking a look at the income statement, you can see the revenues are up to 78 million from 65 million from 2019 second quarter. They were spending a little bit more money on research and development as well as marketing this quarter more than 2019's quarter, but this is good and shows us that Upwork is looking to build their brand and are focusing on growth right now and not profitability. Upwork this quarter is in for a net loss of 11 million or 9 cents a share, which is nothing for the company. Let's take a look at this company's balance sheet. They're sitting on 76 million in cash and cash equivalents. For safety, this will be good to support them in taking net losses. Also, talking about margin of safety, the company's current assets can cover the current liabilities 2 times over, which is phenomenal, showing shareholders that they have strong financials to keep afloat if anything bad were to happen. Also, they are sitting on around only 14 million in current and long-term debt, which could be paid off right now if they wanted to, and they'd still have $60 million in cash and cash equivalents. This is an extraordinary balance sheet overall. A 488 million to 218 million asset to liability is fantastic. Now, Upwork does have one competitor, which is Fiverr. The valuation they have on Fiverr is actually ridiculous. The stock is trading at $109 currently, and for what? The company had just had rapid growth rates, 500 million to 75 million in 2017, and 75 million to 107 million in 2019. Now this is good and all, but the numbers are tiny for a company with this valuation. The market cap for this company is $3.85 billion for a company that's producing 100 million in revenue year over year and is burning 22 to 30 million a year. Upwork here is at a market cap of $1.73 billion, trading at 14 and some change here. Like, come on, the company has generated more revenue and is a way better deal, and if I were to pick one, I would obviously go for Upwork. They have better numbers overall, way better deal compared to Fiverr with a valuation of a whopping $110 a share, which is absolutely ridiculous. Now, I don't want to hop in on FOMO here, but I've done my research, and this company does look very promising with growth potential in revenues and share price. Even though this was brought to my attention by somebody else, I may consider building this stock into a $1,000 position before the rally of the freelancers start, and I miss the uptrend of the share price. Thank you guys for sticking to the end. It means a lot. If you guys are looking for more videos like this one, make sure you guys do like, comment, and subscribe. I post lots of content stock market related. Well guys, that being said, take care and have a great day.